Partnering with a big name in music or pop culture is all the rage among ready-to-wear and footwear brands. These partnerships generate strong brand awareness, expand the community of buyers, and feed new digital distribution channels. From advertising muses to one-off inspiration, artists have gone on to be entrusted with the complete creation of collections. This is what Adidas did when it teamed up with Kanye West in 2014. Yeezy, the rapper's brand, was already set up at that time. The artist had previously partnered with Nike, but this alliance ended in 2013, amid disagreements over financial returns and the designer's independence. It was in 2015 that the first model resulting from the union with Adidas was unveiled. The Adidas Yeezy Boost 750, initially on sale for $350 a pair. This was followed by several releases, which met with unstoppable success, then sold for much higher prices on auction sites. Adidas took the opportunity to test a new distribution method. No more standing in line at dawn in front of the boutiques. You had to sign up to take part in a prize draw. That was a sure way to boost interest in sneakers. Although the collaboration between the German group and Kanye West was going well, the rapper's image began to crumble in 2013. This was due to his numerous outbursts, including anti-Semitic and pro-Hitler remarks, public outbursts, outrageous accusations, and a mystical turn of events. By the end of 2022, several major companies had already distanced themselves from the rapper. Instagram and Twitter locked his accounts, and then the axe fell. Adidas ended its contract with West. Let's take a look back at the partnership. Prior to the collaboration, Adidas had been losing ground to Nike for several years, and even more so in the footwear segment. Sales stagnated at around 14.5 billion euros in 2013 and 2014, compared with 14.8 in 2012. The impact of Yeezy on the German group's shelves is clear, plus 15% in sales between 2014 and 2015, plus 19% between 2015 and 2016, plus 10% between 2016 and 2017. The group's net margin is improving. From 3.4% in 2014, it rose to 8.4% in 2019 and flirted with 10% in 2021. The alliance with West also helped rejuvenate the group's customer base. Let's take a leap forward. In 2022, Yeezy has generated between 1.7 billion and 2 billion euros in sales for the Bavarian company, or 8 to 10% of group sales that year. When the brand announced an end to the partnership and withdrew all Yeezy shoes from its stores, investors were dismayed. The total value of these sneakers was around $1.3 billion. The potential loss of earnings were considerable. Group net income fell from 2.1 billion in 2021 to 612 million in 2022, a decline of over 70%. Net income from continuing operations dropped even more sharply, by 83%, from 1.5 billion to 254 million. A breakup that was all the more painful, since the group was already hampered by the difficult economic context, its departure from Russia, and a slowdown in sales in China due to sustained store closures, a third in 2022, and to a lesser extent in the USA. In early January 2023, Adidas appointed a new CEO, Bjorn Gulden, to steer the brand's turnaround, who announced that the company could record its first operating loss in 31 years. The industry veteran has a proven track record in successfully taking over the Puma brand. Adidas is the sole owner of the design rights to existing Yeezy products in all colors. This means that stocks have to be sold out. At the end of May, the German company put some 15 models up for sale to avoid their destruction and 500 million euros in additional losses. The sale was a success, well beyond the most optimistic projections. In fact, it was a masterstroke. Just as interest in Yeezy was beginning to wane, by withdrawing the shoes from sale, Adidas created a shortfall, and thus boosted demand tenfold, more than 500 million euros in orders for 4 million pairs of sneakers. The group, which could not meet all demand, generated 400 million euros from this first sale, and a net profit of 84 million euros in the second quarter. Adidas has announced that it will donate part of the proceeds from the sale to charities fighting racism and anti-Semitism. The group will also have to pay part of the proceeds to West in royalties and cover the costs arising from the end of the partnership, staff redundancies, factory closures, and legal fees. What next? A second sale of Yeezy products has just ended, and Adidas has not confirmed that it will resume production of the models once stock is exhausted. In China, business seems to be picking up again, with sales up 16% in Q2. Adidas wants to bet big on this market and sponsor more Chinese athletes. In North America, inflation is holding back buyers. Sales were down 16% in Q2. The group will have to deal with the legal action brought by a group of shareholders who feel cheated by the failure of the partnership with West, and focus on the strategy to relaunch the brand without Yeezy, by focusing on the shoes that have made the brand so successful. Gazelles, Samba, and Stan Smith, of course.